Welcome. This is Signal Center. My name is Jamie, and we're going to be diving in to some analysis on Rolls Royce today. I managed to escape Steve and Joe. They can't hold me down. I've gone off the script, and now I am running our TradingView YouTube channels, respectively. So we're going to dive right in today. What we have here is a report that Joe has written, which goes into a bit of the details on some of the fundamentals of Rolls Royce and some of the technicals as well. So we're just going to go through this kind of line by line, break it down a bit. Fundamentals aren't something I'm particularly clued up on, so we can just kind of walk through this together and see if there's anything that stands out. And then the plan is we're going to dive into some charts. I'm hoping everything's working okay. Usually Joe sets this up, so I'm hoping that everyone can hear me okay and all that good stuff. I'm also trying to sort the behind the scenes stuff, so apologies if something does go wrong. Bear with me. We'll dive in. Rolls Royce. So we've got an about section here. My kind of main knowledge of Rolls Royce is obviously the cars, but obviously it does a lot more than that. Designs, develops, manufactures, and services integrated power systems for use in air, land, and sea. Company operates its business through following segments: civil aerospace, power systems, defense, and ITP aero. I don't know what ITP aero is. I've certainly heard of the defense aspect of Rolls Royce, and that's something that I think we will be getting into in a little bit. Key fundamental information we've got here: market cap 7.049 billion. Million, trillion. There's huge numbers. Difficult to think about how much money that actually is, but obviously a really big company, Rolls Royce. Joe was telling me earlier that I think it's the fourth most popular stock on IG, so a really big and popular company. Basic earning per share is 0.02. PE ratio we've got here 44.39. Dividend yield 0%, and the next earnings are out on the 3rd of August. So we have a little bit of time before that. What else should we look at here for Rolls Royce? This is all going to be uploaded, by the way, onto Signal Center's website in a blog form, as is this video. I'm sure the video will be heavily edited to reduce the amount of waffling I do. But nevertheless, so if you want to have a proper read of this whole report, it is really good. It's pretty extensive as well. Joe did an excellent job with it. I'm hoping I'm not getting messages saying that it can't be heard. Maybe if someone is watching, they could just drop a quick comment in saying that I do exist. Anyway, we'll keep going. I'm just going to assume everything is coming through. Latest news impacting price. Equity markets across the world have registered sharp losses. As we know, anyone that's been keeping an eye on the general stock market has seen, we have been really struggling recently, especially the last few weeks. Like I say, I won't read all this out. There's no real point. You can have a little read this yourselves. It is going to be posted on a blog on Signal Center's website as well. So that'll be interesting to get a bit more into. Performance stats. This is always an interesting metric to look at. I think Joe finished this report on Friday. So last week it was up 1.45%. But other than that, it's been pretty heavily hit the last year or so. Down 13% in May. Almost 30% the last 3 months, and I mean you can see the numbers here yourselves. 6 months almost down 40%, so it is down pretty sharply. On the year we're down 32.81%. Joe's added some charts here. Like I said, you can go and have a look at this. I'm actually going to dive into some of my own chart analysis and have a look at what I'm seeing. So we're going to start off on a monthly time frame, and I thought I'd leave the annotations till I was live, because then we can kind of go through it together and talk through why I'm highlighting particular areas. But the first thing that jumps out here for me, and as I said, this is a monthly time frame, so we're going all the way back to 1996 on this left-hand side, all the way to present date here on the right-hand side. So for those of you who perhaps new to charts or are just kind of like starting off and learning, this is a candlestick chart. So each one of these candles, and they're referred to as candles. Actually, I'm not going to dig into really why, but each one of these bars, essentially, which is called a candle, represents 1 month's worth of trading. So as you can see, we've got about 20, almost 30 years of data. If I zoom back out on this time frame, the first thing that jumps out to me is a really key area that in 1998 was a key area. It was a key area again in 1999. Found support here in 2008 at the end of the global financial crash. And again, it's at that key level. So let me highlight it to make it a bit more obvious. You can see here with that green bar, it's a support level. It was a support, but we can make it red because prices actually closed through it. And if we drill down to a weekly time frame, you can see that this key level, which, like I say, back in 1998 was relevant, 2008 was relevant. It's been really relevant recently as well. This is a weekly time frame now, so each candle represents 1 week's worth of trading. But you can see that prices reacted off this key level time and time again. It has now closed through it. So that short-term sentiment isn't so good, but we'll see where things can develop from there. I'm going to pull up a Fibonacci retracement, and I won't go into too much detail on what different indicators mean. That might happen in a different video. But for those of you that are familiar with Fibonacci, you know that these levels come in play time and time again. And what we see here on the 28th of September was the low posted after the COVID pandemic. The recent high posted on the week of 8th of November 2021. So we draw our Fibonacci retracement up to that high, and the 61.8 retracement has been hit pretty much bang on here. This is one of my favorite ones to use. I like the 61.8s. I like the 70. Let me just put up so you can see the 78.6. Obviously, price got a little bit of a wait before getting there, but these levels are really important. If I bring up all the key ones, you can see our price has actually just about hit the 38.2 and reacted. It moved through the 50% Fibonacci retracement as well. So we'll keep the 61.8 on because that's an important one. But like I say, we're looking at a weekly chart here. Has broken through the support level, but I know from a little bit of research I did before that a lot of companies out there are thinking that this is getting to be a good value territory for Rolls Royce, and perhaps they're right. We've obviously seen a large move down following the COVID pandemic, up from what I find this £3.76. We're now down to 82p trading at the moment. And is this a good time to buy? Well, perhaps. We are finding support at this 61.8% fib level, as I said. I hesitate to use the word value, but we're also around this key level, which we have highlighted back from 1998 all the way through to the present day. So this could be a pretty important level for Rolls Royce. I think a close below this. So let me drill down to daily time frame so we can have a bit more of a look at this. If we get a close below this 78p level about here, I think there could be further move for scope for a move lower, perhaps into this 65 pence, 68 pence area down here. The recent trading for Rolls Royce hasn't been positive. As I mentioned at the start, we have had this 48% move down, and we can show you how that measures here. I'll just remove the fib levels so I can draw this a bit clearer. From the recent high to where we are now, we're actually down 45% at the moment. We hit lows of about 48% down from November. So it's been a pretty considerable retracement. Doesn't mean necessarily that Rolls Royce is gone forever. I mean, it's been a well-established stock. All stocks have these periods. It's just wise to be using good risk management, as we always go on about in our Talking Bull podcast. Using risk management helps protect you from downside moves, which all stocks, well, whatever you're trading, is susceptible for that downside. So kind of, I don't think there's too much more to say. We're kind of looking at some more technical patterns where the resistances are on this, resistance levels, I should say. A short-term resistance is this kind of, maybe, let me see if I can use the right tool here. So we've got this. Oh, it's dotted. Let's get that. There we go. This level looks to be a key shorter-term resistance level. You can see our price found support there. It gapped through it, but then it used it as resistance. And again, it couldn't break back above it. So that would be quite a key level to try and take out if we wanted to see a bit more of a bullish picture for Rolls Royce. Where else are we looking here? Draw one here about 133. That looks pretty important to me. You can see if we were to extend this out, Where are we? 133. We're at resistance over here as well. We're at support here. And I think the third one, if we can draw up three, these would be the three key ones I'd want to see Rolls Royce take out. Most recently, actually, I think we could probably draw one more, and that's this swing high here at 97p, which again, if we draw that across, we can see it's not dead on. It's kind of, I've got the magnet on, but you can see over on this left-hand side of my chart, it is still an important level. So I'd like to see those get taken out. But in terms of value, I'm not here to give any advice on how to invest your money, but it looks like we are approaching good levels, particularly if we hold this 61.8 fib, which I've been talking about. That could be a good level to perhaps start scaling in. I'll finish off with a bit more analysis from a technical perspective. We are in this this channel. There we go. There's something being posted on our Telegram, but here we go. We're in this channel. I can't draw the top side of it. Let me turn off the magnet. That might help. So something a bit, that's not great, is it? It's not my best work. But yeah, I think a break above this upper resistance that we have trending down could perhaps coincide with a break of this swing, recent swing high. And that's the kind of action you want to see in terms of a turnaround for a stock like this, or anything in general, really. If I draw up the kind of thing I'd be looking for, it's this lightning bolt action. So perhaps we get a bit more follow through here. We break above, that would be ideal. Get a retest of this really important support, which we've been going on about. We get a bit of an inverse head and shoulders. I can draw that on too. I'm getting excellent at drawing these. Perhaps not. Something like this would be excellent for Rolls Royce and the bulls. So I'll be looking out for a pattern a bit like that to indicate a turnaround here. I don't think there's too much more to say. We'll look at some of the headlines that Rolls Royce has been involved in, and we're on TradingView as you see now. 7 hours ago, the most recent story is KPMG faces UK fine over 2017 audit of Rolls Royce. Auditing firm could be fined up to £4.5 million sterling, so quite a hefty fine, perhaps. I don't know too much more than that, so I won't pretend to. More generally, though, I said I'd reference the defense side of Rolls Royce. I saw this last week. BAE Systems and Rolls Royce secure a $2.5 billion contract to build nuclear submarines for Britain. So that is the defense aspect that Joe was referencing in this report. So yeah, chunky contract there. I would be happy with a 2.5 billion contract. I probably wouldn't be able to build a nuclear submarine though. So that's probably why I don't have it. What else have we got? Anything important? So we're kind of going back to April. Nothing too crazy in recent news for Rolls Royce. We'll look at this one. London stocks slump as recession risk. Yeah, everyone's scared of recession, sure. We don't need that doom and gloom. We want happiness. So yeah, that is pretty much it on Rolls Royce. Like I say, Joe's report will be up in a blog quite soon. I can't be sure when, but perhaps that will be, I say announced like it's a new transfer signing, but it will be announced on Talking Bull when that will go up. So anyone that's watching this back, we are live every morning with Talking Bull, 8 a.m. UK time. We cover a whole load of assets, stocks, cryptos, like we cover everything. So definitely do jump into those morning streams if you can. They're really, really good, if I do say so myself. That sounded a bit arrogant, but Joe and Steve do a great job. How long have we been going for? 18 minutes. We can go for a bit longer. If anyone is watching and would like to see something analyzed, it might be a case that going forward, I do some more of these live stream type things and look into stocks or, well, to be honest, anything crypto stocks, FX commodities. I can just take a bit of a look and do some really basic analysis stuff. And if you kind of not really sure, like I say, if you're new to trading, you're new to charting, that's cool too. Drop questions in. You can leave comments on our YouTube channel, leave comments on the stream, and Joe, Steve, and I will do our best to answer them for you. I mean, they've got loads of market experience between them, and I know a little bit about charts as well. So between us, hopefully, we'll be able to come up with some kind of answer for your questions. We will. I tell you what, I'm going to go off the rails a bit here. We're going to look at a couple more stocks to finish off. That segment of Rolls Royce done for now. What should we have a look at? I'm just going to pick some I want to see. We always look at Apple in the mornings, but Apple has been pretty beaten up the last couple of weeks. For any of you that haven't seen our morning streams, we've highlighted on Apple this perhaps triple top type pattern we've had playing out. Let's see if I can draw it. So we've got kind of one top here, one top here. They're not perfectly in line. They don't really need to be. And we have had a considerable move lower now in the last couple of weeks, as I was saying. Price has found support at this 38.2 fib really, really nicely. And for anyone that was listening to the Rolls Royce part of this video, we talked about how Fibonacci levels play a real important role in providing support and resistance for price action. So taking the lows from COVID in March 2020, what a great time that was, to the all-time highs on Apple, 38.2% is the main real fib I'd look at. You can obviously see even the 23.6 did hold up quite nicely. But my favorites, as I said before, are the 61.8 and the 78.6. But yeah, it's a case for me now of where do we go from here for Apple? There's been a lot of talk about this stock recently, saying it could be the next kind of big short. I don't know about all that. Perhaps that's true, but for now, I mean, we've had such a great run on Apple. I mean, this is a monthly chart again, and you can see really since 2000 and I mean, since forever really, but from these lows of 2003, it's been pretty much one way, with a couple of crises in between. But yeah, I think the next reasonable target for Apple on the downside would be this 50% level. It would be a pretty chunky fall off from the all-time highs. If we take where we are now, we're already down at the moment about 25%. We did hit 27% last week, and a retracement down to 50% fib would be a 35% down on Apple. So in the grander scheme of things, that's not horrible. But it would obviously, if a lot of people like to get into euphoria of stocks like this near the top. So that's why we always talk about protecting your downside. We'll do a couple more. I feel like I can't just do one more. What stocks do people like these days? Google. Do people still like Google? Alphabet. This similar kind of story, actually. We've had this really excellent run on Google for many, many years. And this is the real first sign of a topping pattern here. As Joe likes to talk about, these rounded tops and rounded bottoms. If I can get the right drawing tool. No, I cannot. I'm still learning how to use TradingView properly using all these different things. By the way, great software. If you haven't used TradingView before, I know I'm streaming on TradingView now, but it's free. It's great. There's loads of cool stuff you can have a look at on here. But more specifically, looking at Google, we broke through this key support here, which I was watching. It's about 22,500, so a bit of a psychological level as well. And we broke through that, and we've been edging down. It's not been anything too dramatic, too volatile, but we have been slowly heading lower. Where to next, really, on the downside? We do have a gap open from February of 2021. There's not a load of support. I guess the next area of some kind of buying would be this kind of confluence here, which is actually quite far away. I'm not saying that price will necessarily get to here, but from a technical perspective, there's not too much in the way before that. So that'd be interesting. And the pre-market is up to 21.96 though, so that is good. 24 minutes. It could almost be lunchtime for me. I feel lunch is just around the corner. But we'll look at a couple more. Tesla, another big one we mentioned this morning on Talking Bull. A pretty significant close last week, closing below these wicks here. Further downside, perhaps we've got the Fibonacci's drawn. We're actually down in the pre-market on Tesla as well to 657. It doesn't seem like too long ago where prices were all the way up at, I mean, even all-time highs. That was only in November, but these recent highs was only in April, and since then we are down 40%, just over 40%. So a rough time for Tesla. I don't think it doesn't look like 40% now. When you zoom out, it's like, oh, it started all the way down here and it's only down a little bit, but that's because it's a logarithmic chart and it tracks the percentage move. It looks a bit different if I change it to just the price chart. This looks a bit more dramatic, but we'll go with the undramatic chart, which looks a lot nicer. and less scary. So I think Tesla's probably next looking at. It did hold this 50% fib. I think if it doesn't, we could be heading to this support. I've been informed that someone's asking about a stock. Sorry, this is me struggling with all of the button clicking effectively. So let me just pull up the stream, see if it's, at least it's all working. So I guess that's good. Let me see if I can find this. Streams upcoming. Here we go. About to find myself. Nvidia is interesting. Thank you, Potato Nator. Oh yeah, I missed a couple of comments. I'm awful. I'll bring that over this side. That would make sense. And now, right. Anything interesting on intraday? Sorry, I missed that, investor mate. I am the worst. I'll get better. Potato Nator though. Nvidia is interesting. Let's take a look at Nvidia. Just turn on my headset, which decided to turn off. That's always good. Yeah, Nvidia is interesting. You know, I don't think I need my headset. I'm hoping I don't. Let me know if you can still hear me. But continuing, yeah, Nvidia, it does look very interesting. We had a key breakthrough of a support level similar to Google. In fact, we had something that actually looked quite like this chart wise. I think if we quickly pull up Google again, or Alphabet, you can see that it's a bit, was it Google? Oh no, I've got Apple here. I was going to say, yeah, we had this support and then price has not really dramatically fallen, but it's slowly fallen down. And similar to Nvidia, it looks, I mean, they look really similar charts actually, but yeah, it's interesting. We had this doji candle. Price is down in the pre-market again, but we're very close to what used to be a resistance level just here, which will probably act as support, as it quite often does. Oh, I should put it as support. But yeah, again, a bit of a rounded top. I think the writing was a little bit on the wall for Nvidia in the short term when we had this high and price couldn't get back to it. It fought hard here, fought even harder here, but then the bulls were exhausted. They thought, I'm sacking this off. It's not working. And price has gone steadily lower there. So we are down now in Nvidia, best part of 51%, which again doesn't look as bad on a chart like this. We'll quickly dip into the algorithmic chart and it looks a lot worse here. So we will leave it quickly. But yeah, Nvidia is interesting. I think we'll draw on a couple of Fibonacci levels, which if you've been watching the whole stream, I've talked about a fair bit. You could obviously draw them from different places, but I tried to find a significant low. So you could go from probably this swing low. I don't think it's a bad spot to draw a fib from. If I get my magnet back on, there we go. Look at that. We're right at that 78.6. We had quite a nice hammer candle here at the 78.6 fib 2 weeks ago, but price couldn't rally off that. But it is still closing above it, which is good for Nvidia bulls. I would like to see it hold this 78.6 fib. There is a bit of structure here on the left-hand side of the chart, but I think the likely move here is for a bit more of a retracement on Nvidia, at least into these kind of this 150 level here. The psychological support of that level as well will come in to play a factor as well. But yeah, Nvidia, interesting stock. Obviously had a tough time in 2022, like a lot of stocks have. But this kind of run, they never last forever. If we look at what percentage move this was from 2018, just your casual 1000% increase. So that isn't sustainable. There had to be a bit of a drawdown, and it looks like we are going through that now. How long it will be, I don't know. No one knows. So anyone that pretends to, don't listen to them. Just react to what price does. Make sure you're using good risk management, and live to trade another day, I guess. We will call it a day there. It has got to be lunchtime for me now. I'll probably have a chicken wrap. Thank you everyone for tuning in. I do appreciate it. Leave some feedback if you have time. Drop a like, drop a follow. We'll be doing more of these type streams in the future. We do Talking Bull every morning, which, like I say, Joe and Steve do some great stuff. So do tune into that if you would like to. 8 o'clock every morning. Thanks very much again, everyone, for joining me, and I will see you soon.